Welcome everybody to a quick hit review video. It is Sunday the 31st of May. June will be tomorrow, start of a new month. And there's four currency pairs that I'm looking at. And the first one is on the Swiss yen. And we have here a potential high and tight flag. Now what I'm going to do is delete the information off. I'm going to go out to the dailies and do the higher time frame analysis. Now here on the dailies, I'm going to put a structure level on right here. And you can see that's where the highest close of the candle is for this structure point, and we have not as yet reached that level. Also, this candle is a higher high, higher close than this structure level and this one as well. So straight away here on the dailies, I'm looking that the market can go a little higher. Let's drop down to the 240. And what I'm noticing is that we have a very big and bullish candle, an elephant candle here, lots and lots of buying pressure. And when I see something like this, we typically see sideways movement, which is where the market has run out of steam after this big bullish candle. And we see a small hold, something like a flag or a high and tight flag, and then a continuation a little higher. If we also zoom out, what else do we have? Not much else other than the fact that again the market can still go higher here. So let's drop down to the 60. And here we see that classic sideways movement. So we've got a very directional pole here as well, a nice swing in the market which is coming off this trend line. Let's drop down to the 15. And so the good thing about this is the pole is so long that it gives you a better reward to risk. So we draw it out, the trend line like so. Duplicate it, move it down, looking for a minimum of 4 touches, 1, 2, 3 and 4. You can see we have just put in a 3-bar reversal, possibly an indication that we could be coming back down for another test down here. What I really like about this is the 112 psychological number. It's going to offer you a brilliant place to hide your stops. So if the market comes down a little, you'll be looking at stop placement around this level. You can either go 1 ATR below it or 10 pips below that psychological number, which is what I like to do. And then you're going to put on your fib from your swing high to your swing low. And you're going to look for that 127. Now remember, we do have that structure level which I put on earlier. And you can see right there, just around that structure level is potential targets. So if we do come a little lower here, this trade is going to offer you a nice reward to risk, just depending where you get your entry. It could be something as small as 15 pips for a reward of 44, offering you a 3-to-1 reward to risk. Another currency pair is the pound CAD. This would be a trend continuation trade. I'm going to delete this information off. And what we had here is we had a move higher. And then we had the market which adhered to this higher structure level. And then from this triple test, 1, 2, 3, we broke to the downside. So the way I'm looking at this market is that we can come to retest these structure lows down here. As you can see, we've had a slight return and then a move lower, and that becomes clearer as we drop down the time frames. We can drop down to the 240. Here on the 240, we've got a nice structure level just there. We've got you can see the market broke to the downside. We've had sideways movement, a triple test here, 1, 2, 3, a clear break to the downside, and now we're coming back up. So you can do a couple of things. You can look for first chance entry, which is a rotation pattern within the wick. That is no longer valid for me. You can simply look for a lower low, lower close within the candle bodies, which is here. or you can look for a last chance entry, which is up here. Now, it's a bit of a pain, this one, because we do have this very long wick. And as you can see, we've actually held this 7,000 psychological number just down another time frame, down to the 60. We did have a back pattern here, which completed, which you could have used as the entry, X to A to B, B to C, C, D completion. That would have provided you actually a very nice entry. I personally didn't get involved with this. I didn't look at the pound, but I would have had stops at the 113.5, and my target, if we just go back out to the 240, would be this lower structure level just down here, like that, giving you a brilliant reward to risk. Would have been a cracking entry. However, I was not involved, so I'm going to look for another entry reason on that currency pair. We've got the New Zealand yen and New Zealand dollar now, the last two currency pairs, both very similar. We've got potential high and tight flags on both of them. So on this New Zealand yen, we're going to go out to the dailies. And I'm going to put a structure level in right here at this structure level. And as you can see, the market is currently holding that structure level. Drop down to the 240. What we've seen is a nice rally, a pullback, and then a move higher. I'm going to put a couple of structure levels on. Now, because this has occurred at structure, this could either be a high and tight flag, or it could be a double or triple test. And we could see here a break to the downside. Now, the question we've got to ask ourselves is, what is more probable? The first thing I'm noticing is that we are at 6,700 flat, so it's a psychological number. So for me, I cannot take this as a high and tight flag. I can only take it if we have a confirmed break above, close above, a pullback, and then a continuation. Or if you're looking for shorting opportunities, I would look at how good this structure level is that we're currently testing. And you can see here we've got that double test which we looked at. We've got a very small test here. Let's look further left. Is there anything else? No, there isn't. So this is a very minor level of structure that we've come into. For me, it's very likely we're going to see a break to the upside. I'm going to have to wait for confirmation for that though. And if we go and check the other New Zealand pair, which is the New Zealand dollar, we have a potential triangle here. Could also be a high and tight flag. Pretty much the same thing that we're looking at, like this. And we've had several touches here. You can even drop down the time frame down to the 60. And again, what you can wait for here is you can wait for the breakout to the upside, a pullback, and then a potential continuation. So a few currency pairs to look at there. Something that I'm going to be paying attention to going into Monday and into next week.